Hi class, so in this video, we're going to discuss the topic joint arrangements, or in some old books, this is called joint ventures. So before we proceed to the standards and accounting for these transactions, what comes to mind when we talk about or when you hear the word joint venture? Keywords natin, joint and venture, diba? So many business nowadays, we want to take we would want to undertake ventures or projects. So let's say may established company na, diba? And what would they do, diba, para magawa yung project na yon? They have an agreement with another company where both of them or one or two persons will pool their resources, no? Pagsamahanan nila yung mga assets nila, o kaya they will pool their human resources, their people, to raise funds as well, so that they could start their venture or they could start their project. Okay? So why? For the purpose of, syempre, getting income at the end of it, diba? So that's what we mean by joint or getting into joint ventures. Although later we're going to discuss the actual textbook definition of joint arrangements and joint ventures. But for this topic, we're going to discuss ano ba yung nature and types of the joint venture. How do we account for venture transactions? And how do we record the distribution of profit or loss? Okay. So let's talk about the standards. So before, we have what we call PAS 31, Philippine Accounting Standards 31 for joint ventures. Okay. And it is being classified into 3 classifications. Okay. Which is JCO, jointly controlled operations, JCA, jointly controlled assets, JCE, jointly controlled entities. So pag sinabi natin jointly controlled operations, of course, operations, ano bang pinag-usapan natin ito? The use. Diba? The use of assets and resources of the venturers. So instead na magtayo sila ng bagong company or corporation or partnership, then they just they use their own property, plant and equipments. They have their own, they use their own inventory, they incur their own liabilities. What else? Expenses to raise the funds to start their venture activities. Okay? Kaya controlled operations. They combine their operations, resources, expertise. For example, they want to manufacture a new product. They want to market or distribute a particular product. Yeah. Okay? So on the accounting side, there is no separate accounting record to be required. Okay? So hindi rin kailangan mag-prepare ng separate financial statements for the joint venture. Okay? What else? When we say jointly controlled assets naman, okay? In this form, so may joint control then or ownership of one or more assets contributed for the purpose of the joint venture. So it does not require then na mag-establish ng corporation or partnership or a separate entity from the venturers themselves, right? It's just that they will contribute the assets, okay, to be used for the operations of the venture. Okay. So 2 or more enterprise, they will jointly control a property, plant, and equipment, for example. And kung ano yung let's say sales from it, they will share the sales from it. Or for example, rent, the business is renting, no, or lease. So let's say a building, a property, they will jointly control that building and then they will take the share of the rent receipt of 50-50, the 50-50. And kung mayroong expenses, of course, they will also bear the share of the expenses. So for this case, there is a need to have a separate accounting record, okay? But it will just be limited to those expenses incurred related to the joint venture. Okay? What else? And last classification according to PAS 31 is jointly controlled entity. So it's a joint venture which involves establishment of a corporation. So may establish a separate entity, pwede yung corporation or partnership, for which the venturers would have an interest. Okay? So it's the same way. So yung corporation or partnership would operate in the same way as the parties or the other businesses, except that there is a contractual arrangement between the venturers na meron silang established joint control over the economic activity of that entity. For example, si A tsaka si B, they form a jointly controlled entity, which is si AB. Yan. So A and B has a joint control over the economic activities of AB Corporation. Okay, so for this case, syempre it is accounted for separately as a separate economic entity. So may separate FS din siya, separate accounting records. Okay? So under PAS 31, how do you account for the interest in jointly controlled entity? May methods dito na ginagamit in the previous standard, which is proportionate consolidation na tinatawag, or the equity method. Sinabing proportionate consolidation, consolidated financial statements, such as the statement of financial position, should include all the share of the assets that it controls jointly as well as the liabilities. Okay? Sa consolidated comprehensive income naman, lahat ng share in the income and expenses of the JCE or the jointly controlled entity. Okay. The other method, which is perhaps you're familiar, is the equity method. Diba? This is being used for investment in associates as well. So under PAS 31, these are the classifications of joint venture. Now, dumating si PFRS 11 and it's actually the standard that we are using right now. Instead of the title na interest in joint venture, the standard recognizes all transactions to be joint arrangements. Okay? And under PFRS 11, nagkaroon na lang ng dalawang classification. So we have joint operations and joint ventures. When we say joint operations, they have the rights to the assets, obligations relating to the arrangement, while joint venture, net assets of the arrangement. We're going to discuss this deeper later on. Pero basically, what happened was, IIS, kasi hango din naman ng PAS, di ba, from the IIS. PFRS 11, from IFRS 11. So yung JCO at JCA, jointly controlled operations and jointly controlled assets, naging na lang siyang joint operations. Okay? JCE, jointly controlled entity, and combination niya. Then if there is a separate vehicle, joint venture. Okay? So this, what do we mean by separate vehicle? We have a textbook definition later on, pero this is when we establish a separate entity. Pag sinabing separate vehicle, gaya nung kanina. Si A and si B, nagtayo siya ng AB Corporation. The separate vehicle is AB Corporation. Okay? And this is the summary of it, of what happened to our standard. Okay, also, because of the changes, PFRS 11 or IFRS 11, mas lumawak din yung scope niya. It now applies to all entities that are party to joint arrangement. Hindi na basta ventures lang ang tawag, no? Now, the transactions under scope of PFRS includes venture capital organizations, mutual funds, investment-linked insurance funds, and other venture capital organizations. Okay, now let's go to the topic, joint arrangements. By textbook definition, joint arrangement is an arrangement which two or more parties have a joint control. Later, we're going to discuss this because this is important now to the topic. Yeah. So two or more have joint control and is stated to have the following characteristics. So the following should be present. Number one, the parties are bound by a contractual arrangement. Yes. When we say contractual arrangement, this is an enforceable contractual arrangement. Usually, it would be in writing kasi contract, diba? Pero it's not always the same. Because if you have learned from your obligations and contracts, a contract does not always need to be in writing. Okay? And sa contractual agreement din, nakalagay din dyan if they will be making a separate vehicle, if they will establish a separate vehicle, or if not, so stipulated din sa contractual arrangement. And then the second criteria is that the contractual arrangement gives two or more of the parties the joint control of the arrangement. Okay? And now, instead of calling them venturers, parties to a joint arrangement, it does not necessarily mean na meron siyang joint control. But if they participate in the joint arrangement, then they are a party to the joint arrangement. And then when we say separate vehicle, separate identifiable financial structure, so it may be a partnership or a corporation, or any separate entity that will be established, okay, for the purpose of conducting the joint arrangement. So ano ba yung contractual arrangements, guys? So we discussed this is one of the criteria. There has to be the terms upon which the parties participate in activity that is subject to the arrangement, syempre. So, ano ba yung purpose? Why are they establishing a joint arrangement? What else? Who will be the, kung corporation yan, who will be the members of the board of directors? Who will be the human resources? Who will be the governing body? Kung hindi BOD, no? What else? When it comes to the decision making, who has a say to the decision-making process? Which party? What else? Voting rights, diba? They discussed in there. What else? Of course, the capital and the contribution stipulated also in the contractual arrangement. How will the assets, liabilities, revenue, and expenses be split? Okay? How will assets, liabilities, revenue, and expenses be shared against the shared with the parties? Okay? And then joint control daw, dapat may joint control yung parties. When you say joint control, so this is important to understand, no, the definition of this term, because this is a crucial element of having a joint arrangement. So joint control, contractually agreed sharing of control of an arrangement which exists only when decisions about the relevant activities require the unanimous consent of the parties sharing control. Okay, so four keywords. First one, contractually agreed. Okay, so there is a contract arrangement. Number two, there control and relevant activities. and unanimous consent of lahat ng party. Okay? So that means for when they have joint control, the parties that control the arrangement, they must act together to start their relevant activities that will affect their arrangement. Okay, now we have two classifications as discussed earlier of a joint arrangement. Kasi marami naman talagang purpose on why a joint arrangement or previously called joint venture, diba, is established. They want, for example, pero the ultimate purpose of it is, syempre, to have income or to share in the profit or loss. No? So the two classifications is joint operations and joint venture. Let's discuss first joint operations. So by textbook definition, it's a joint arrangement whereby the parties have a joint control of the arrangement. They should have the rights to assets, obligations for the liabilities of the arrangement. And under the joint operation, the parties are called the joint operators. Okay? So usually, to manage the activities of the joint arrangement, the joint operators will appoint the manager who will be the employee of the joint operators. So again, assets and liabilities. Meanwhile, when we say joint venture, joint arrangement whereby the parties have the joint control of the arrangement, have the right to net assets of the arrangement. Net assets naman ang pinag-uusapan. Or equity, di ba class? Those parties are called the joint venturers naman. Now, depending on the structure, we can identify whether a particular joint arrangement is a joint operation or a joint venture. So what structure are we talking about? So diniscuss natin kanina. If it's not structured through a separate vehicle, meaning walang na-establish na separate vehicle or separate partnership, separate corporation, separate entity, then the treatment is it is a joint operation. Okay? Bakit? Kasi syempre, they would need to maintain sa sarili nilang books yung lahat ng transactions. Therefore, the rights to the assets and liabilities and the rights to revenue and obligations have to be recorded, or the party have those rights. Okay? On the other hand, if the joint arrangement is structured through a separate vehicle, okay, merong na-establish na separate entity, separate legal entity. It depends. It can either be a joint venture or a joint operation. Okay? It depends on what? Depends on the definition. Babalikan natin. If the party has the rights to assets and obligations for the liabilities, edi joint operations yan. But if net assets lang, diba? Therefore, joint venture. So what are the factors that need to be considered to determine whether the joint arrangement structured to a separate vehicle is a joint operation or a joint venture? So it depends on number one, the legal form of the separate vehicle. Okay? So when we say the legal form, diba? What is the business legality? Is it a corporation? A partnership? Okay? Sino yung magmamay-ari ng assets and liabilities of that corporation? Okay? So let's say, if, kagaya ng example natin kanina, si A and si B, they established AB Corporation. And it stipulates that the assets, the liabilities will be owned by and maintained by AB Corporation books. Therefore, si A and si B, they will only have interest, diba, in the equity or in their investment, depending on the amount of their investment. So therefore, they are joint venturers. Joint venture yan. Okay? However, if it states there that yung term na the separate vehicle whose legal form does not confer does not confer, ano bang ibig sabihin natin ng confer? Does not grant separation from the, what do you call that? Does not grant separation between the parties. So, AB Corporation is not separated from A and B. Yun yung sabi sa legal document when establishing AB Corporation. And therefore, the assets and liabilities are considered the parties' assets and liabilities. Kasi nga, they are not separate now eh. Therefore, the arrangement is a joint operation. Does not confer separation if there is such stipulation. Joint operation na siya. Kahit pa sabihin na may separate entity. Okay? What else? So aside from the legal form, we also take a look at the contractual terms and conditions of the arrangement. So we have to examine whether the terms provide the party with the right to net assets lang ba, di joint venture. The rights to asset and liabilities, di joint operations. Kasi even if there is a legal form of the separate vehicle, okay, the certain rights and obligations in the contractual terms of the joint arrangement, it may reverse the effect of that legal form. So for example, sabi na nga dun sa legal form, okay, the joint venture upon our first assessment. However, sa contractual agreements naman, they state that the party has an obligation for the other party or obligation to the separate entity. So therefore, joint operation pala siya. Okay? Sabi sa contractual arrangement, A and B have the rights to the assets of C as of AB Corporation. Therefore, joint operation siya. Even if there is a legal separate corporation, AB Corporation. Okay? And what else? Other facts and circumstances. If, example, yung legal form, the contractual terms does not specify, so we may check other facts and circumstances. Okay. Okay, now accounting part. For joint operations, line by line nga, ito yung tinatawag na line by line. The joint operator will recognize its assets, including its share of any assets held jointly, liabilities, including its share of any liabilities incurred jointly, i-add niya sa assets niya yung joint assets, and liabilities yung joint liabilities. For the case of revenue from the sale of its share, yan, we recognize then natin. And for the share for sale of output, or output, let's say sale of the merchandise, no? Yan. And sa expenses, i-recognize din niya in the books. So, ibig sabihin, i-record niya yung asset, i-record niya yung liability, yung revenue, and expenses in the books. In its own books. On the other hand, sorry, I have an illustration pala later, no? Pag accounting for joint ventures naman, we only recognize the interest in joint venture as an investment. So if you remember, we use the standard past 28, investments in associates and joint ventures. We account for it using the equity method. Okay? Instead of recognizing the assets, liabilities that is contributed to the joint arrangement, instead, we just recognize investment in joint venture account. Okay? So let's have an example. Illustrative problem. So for joint operation, sige, let's identify whether this is joint operation or joint venture. Okay, so you have two real estate companies, Company R and Company S. Set up a separate vehicle, entity RS. Okay. For the purpose of acquiring and operating a shopping center. The contractual arrangement between the parties establishes joint control of the activities that are conducted by entity RS. The main feature of the entity RS's legal form is that the entity, not the parties, has the right to assets and obligations for the liabilities relating to the activities of the arrangement. These activities include the rental of the retail units, managing the car park, maintaining the center, and establishing the reputation and customer base for the center as a whole. And then we have, so dito pala, di ba? What do we conclude? This is a joint venture. There is a separate legal entity. Okay? And when it comes to the contractual arrangement naman, the terms, basahin natin. The entity RS owns the shopping center. The contractual arrangement does not specify that the parties have the rights to the shopping center. So, okay, it clears out na wala tayong rights to the assets. The parties are not liable. So, for when it comes to liabilities, hindi rin obligado. Ha? Limited lang to the parties' unpaid contribution. So, joint venture pa rin. The parties have the right to sell or pledge their interest in entity RS, and each party receives a share of the income from the shopping center in accordance with its interest in entity RS. Okay, so based on the legal form and the contractual arrangements, we conclude that this is a joint venture. And then the following are the summary of transactions of the joint arrangement for 2012 and 2013. So let's prepare the journal entries for each. Let's prepare the journal entries. Okay, so number 1, Company R contributed 6 million for a 60% interest in the net assets of entity RS, and Company S contributed 4 million for a 40% interest in the net assets of entity RS. So let's prepare the entry side by side. Company R, books nito, and Company S. So again, equity method, gagamitin natin. So investment in joint venture, credit cash, contributed 6 million daw. Okay. How about si Company S? So nag-contribute naman siya ng 4 million. Okay, that's it. Next, number 2, entity RS. So 60 and 40 ang hatian nila. So total contribution basically is 10 million. 10 million. Number 2, entity RS acquired a shopping center at a cost of 12 million. Okay. So, anong entry natin dito? So, syempre, hindi may record ba si company R tsaka si company S? Wala. Yeah? Kasi ang magre-record na yan ay si company RS sa kanyang sariling books gamit yung investments. Okay? So, there's no entry for this one. Next, major repairs incurred to renovate the building amounts to 3 million. This is capitalized to extend the remaining life of the building to 15 years. Okay. Do we have an entry on company R and company S? Wala rin. Kasi saan niya i-record yung repairs? Company RS will record that one. Usual entry lang naman, class. Debit repairs expense, credit, cash. But let's not include it here because we're talking about the accounting for the joint venturers. Number 4, operating expenses, including depreciation for the year, amounts to 2.5 million. Okay, so sino magre-record niya? Si company RS din. Debit operating expenses, credit cash. Rental income collected from the tenants, 3 million. So, sino magre-record niyan? Si company RS din. Debit, cash, credit, rent revenue or rental income. Number 6, net income or loss for the year is distributed to the venturers in accordance with their interest in the joint venture. So, ito na, magkakaroon na tayo ng entry for company R and company S. For the share to record, kasi naka-receive na ng distribution eh. To record the share in the net income for the year. So how much is the net income for the year? So we have to compute based on the information. Diba? Yung rental revenue, or rental income, yung report ni RS is 3 million. 3 million yan. And then the expenses, operating expenses, reported is 2.5 million. So how much is the net income by RS company? 500,000. So to record the share, di-distribute natin based on their interest. So sabi natin si company R is 60%, company S is 40%. So therefore, what should be the entry under equity method? Debit the investment account to record the share in net income. Then you credit investment or income from joint venture account. Which goes to your income statement. So 500,000 in our share, company R's share is 60%. So 300,000 debit, credit 300,000. Si company S naman, 40% ang share niya. So times 0.4, 200,000. And that's it. Entry to record during the first year. Okay. Number 7, 8, 9, and 10, they are 2013 transactions. No? So the following year na. Number 7, operating expenses, including depreciation for the year, 4 million. Okay, again, company will not record that in our books kasi nga share. Equity method lang tayo. And then, number 8, rental income collected for the year, 6 million. So, ano lang i-record natin ulit dyan? Share in the net income. So the net income is 2 million. The net income of company RS. However, number 9, there is a dividends paid at the end of the year. If you remember, under equity method, any dividends paid is considered as return on investment. So see, company R, how do we record the dividends? Debit cash na receive natin. So total dividends is 200,000, pero yung share natin is 60%. So 120,000, that is a return on your investment. On the other hand, company S, to record the dividends, ba? Naka-receive ng total dividends 200,000, 40% ang kay S, so 80,000. That's it. To record the dividends received as a return of investment. And then to record the investment as share, in the profit for the year. So net income natin 2 million. So ganun ulit, debit investment in joint venture, credit income from joint venture, 2 million times 60%, 1.2 million. Under company S, debit investment in joint venture, credit income from joint venture, 40% of 2,800,000. Okay. Meron pa ba tayong gagawing entries? Wala na. Okay? So that's it. So in a separate financial statement of company R, they will have an investment in joint venture account during the first year. If kukunin natin during the first year, 2012. Paano yung balance ng investment in joint venture natin? 6.3 million. Following year, the balance is beginning minus, nagkaroon kasi ng dividends, then plus the share in the net income. 7,380,000. For company S, same thing as compute. So 4.2 million and 4,920,000 is the balance of the investment in joint venture account. And that's it for equity method. Okay. How about joint operations, accounting for joint operations? So I have this problem. Actually, let's determine kung joint operations nga ba siya or baka naman joint ventures din. Company A and Company B are two companies whose businesses are in public and private construction services. They set up a contractual arrangement to work together for the purpose of fulfilling a contract with the government for the design and construction of a road between two cities. The contractual arrangement provides for the participation, shares of companies A and B, and joint control of the arrangement, the subject matter of which is the completion and delivery of the road. Okay? The parties set up a separate vehicle through which to conduct the arrangement. So now, kung may separate vehicle siya, again, it depends. Hindi natin pwedeng i-conclude na joint operations or joint venture siya. Wherein entity X, on behalf of the companies A and B, enter into contract with the government. The parties agreed that the assets and liabilities relating to the arrangement are held in entity X and that the parties, and that the parties, not entity X, have the rights to the assets and obligations for the liabilities of the entity. So therefore, joint operations yan. Actually, kahit din natin basahin itong contractual arrangement. But basically, it establishes that the rights of all the assets are shared by the parties equally. So it strengthens that it's joint operation. The parties have several or joint responsibility for the operating and financial obligation. Letter A is all about the assets. Letter B is liabilities. And then the revenue and expenses is shared 60-40 respectively. For the purpose of operating and overseeing activities, Company A and B appoint an operator who will be an employee of one of the parties. Companies A and B agree that activities will be executed by the operator's employees on a no gain or loss basis. In accordance with the terms Entity X invoices the construction services to the government on behalf of the parties. And the following is the summary of the joint arrangement transactions. So how are we going to record the following? So let's prepare the journal entries. Okay. On the books of Company A and Company B. So letter A, entered into a fixed price contract with the government for the construction of the road, 100 million. So this is a transaction of Company X on behalf of Company A and B. And this does not warrant any journal entry. Alam naman natin yan, Cas, diba? Kasi entered into a contract pa lang. There is no accountable transaction yan. So no entries on both. Letter B, they purchased construction equipment, 50 million on account. The parties hold this equipment jointly. So under the joint operation, we will list the company's assets, including the jointly controlled assets. Okay? 50 million now. So debit, property, plant, and equipment, or equipment, construction equipment. Credit, accounts payable. Sinabing jointly, so 50-50. So kung 50 million yan, di 25 million for each party. So under Company B, same entry. Okay. Letter C, materials purchased on account, 20 million. The part, okay, walang sinabi no, kung paano yung hatian nila. Of course, yeah. How do we record this one? Materials, construction materials. Pwede rin gamitin construction costs. Credit on account daw, on accounts payable. 10 million. Okay? So bakit 50-50? Kasi sabi nga dito, shared by the parties equally. Di ba ang construction materials, it's an asset. PPE is an asset. Yan. Letter D. Labor paid to construction workers. So labor, it's an expense. How do we record labor usually? Salaries, no? Pero for this case, kasi construction related siya. Talagyan lang natin construction labor. Pero paano hatian? This is an expense. Resulting should be 60-40. Credit, cash, paid debt. So 60-40 hatian. So kung 10 million, 60% kay Company A, 6 million. While for Company B, 40%, 4 million. Okay? What else? E, operation expenses, including salaries of employees, amounted to 5 million. So operating expenses, i-record din natin yung share natin. 60% kasi expenses, ang hatian daw ay 60-40. So kay Company B, 40%, 2 million. Okay? And lastly, number 5, letter F, received the 100 million contract price from the government. So meaning, naka-recognize tayo ng revenue dapat dyan. So revenue is also 60-40. So 100 million times 60%, 60 million kay company A, kay company B ay 40 million. Okay. So that's it. Treatment for or accounting for joint operations and accounting for joint ventures.